All over the world, there's a real estate boom. Properties are overpriced, selling for tens of thousands to millions of dollars. And no, these aren't houses in Miami or Tokyo. This is virtual land in the metaverse. As major names like Snoop Dogg, Adidas, and Atari bought virtual land, some argue that there's a kind of gold rush for digital properties as we speak. JP Morgan just issued a report stating that they expect the metaverse to generate $1 trillion per year. Seriously, trillion with a T. But is virtual land a good investment? Better than physical real estate? Are the risks different than real estate? And most of all, is this the start of a revolution or a big bubble that's about to pop? There's a race between big corporations and high-profile individuals to pour millions of dollars into virtual land. And why is that? I mean, they either went nuts, and that happens occasionally, or there's something here. And hold on, because if you think digital land is insane, wait until you hear about virtual property developers, architects, mortgage lenders, and realtors, all within the metaverse. Now, the term metaverse means many different things, but in this context, it's a digital land full of opportunities that are both social and economic in nature. It's a place where you can interact with people and create experiences, but also start a business and even pay your bills. The big bet that tech companies are making is that the metaverse will be the successor to social media, meaning all the social interactions that currently are stored on Facebook, Instagram, or TikTok will soon transition to the digital space. Well, a more digital space. That's where the metaverse gets weird. Like, what is the metaverse? The key difference is that unlike current platforms, in the metaverse, the financial side of things is ingrained within the system so deeply that it's actually one of the defining characteristics of this universe. Normal people can make money in the metaverse more than any other social media site or video game. And it also applies to land owning your very own piece of the metaverse. Now, famously, the term metaverse comes from a cyberpunk novel by Neil Stephenson called Snow Crash. I remember when I first read Snow Crash, and my first thought was, wow, this guy is a fortune teller. Like, he nailed it on the head. In this novel, people escape their bleak dystopian everyday life and use their avatars to jump into virtual reality. And the protagonist, whose name is actually Hero Protagonist, lives in this miserable storage unit type home. But when he joins the metaverse through a pair of goggles and headphones, he goes into an online world where he becomes this big shot that can afford top real estate. So we surely get why this idea is attractive, and even more so since the pandemic. If I had to choose between crappy real estate on a busy street and a virtual mansion by the sea, I might think about it. For most people, where you live and how you live defines who you are. So in other words, it's a matter of status. So in a sense, the same applies when you buy your virtual property. You want to make sure that you're able to monetize it eventually or benefit from it, and that you choose the right district with the right neighbors. Right now, there are several metaverses. Some of the most popular are Decentraland and Sandbox, where people can own assets and create experiences on the blockchain. In both metaverses, buying virtual property is pretty fast and easy, a whole lot easier than dealing with agents and showings and escrow in real estate. Virtual land is bought with cryptocurrencies, and just like real land, there is a fixed number of properties. And some areas have much higher demand than others. So if you take Decentraland, for example, they have their own marketplace where you can view their properties. The smallest and the cheapest plot of land right now goes for 4,600 mana, so around $13,000. And the highest, not much, just a few $1 million. In the Sandbox, the cheapest piece of land that you can find currently goes for around $10,000. More than some real lots of land in the real world. Once you purchase your virtual real estate, the sky is the limit. You can build on it, you can decorate your home, or you can create all sorts of experiences. This could be a business, a game, a gallery to sell your NFTs, or just hang around in your digital underwear. By the way, the rumors are true. Victoria's Secret is planning a line of digital lingerie for avatars, so line up. The legal title that proves you're the owner of your virtual property is a non-fungible token, or NFT. Your NFT is essentially your property deed. It's on the blockchain, it's written on this big super secure ledger, so it's safe and transparent. Just imagine if buying a real house was that easy. Instead of having this Niagara Falls of paperwork, you could just pay this guy like $50 in transaction fees and it's done. Now, what about the risks? Physical real estate is a relatively safe investment, most of the time. Does the same hold true for digital real estate? Before diving into the risks, let's talk about opportunities. Two major thoughts here. The first is price. If you feel that the prices are crazy, which arguably they are, some people feel the opposite. They feel that this is a bargain. In 2021, virtual real estate sales were over $500 million. And in a recent interview with the Wall Street Journal, the CEO of Tokens.com stated that owning land now in the metaverse is like buying land in New York 250 years ago. And at first, it made me choke when I first read that they paid $2.4 million for a plot of virtual land. But real estate agents know how powerful the first mover advantage is in the real world. His company is not the only one investing heavily in metaverse real estate, believing that this is just the beginning. Many other investors seem to think exactly that, and not just Zuckerberg, who also owns plenty of real land himself. Just recently, JP Morgan became the first bank to join the metaverse. So if you want to drop by and say hello, their virtual land is located in Decentraland. Inside, you'll be welcomed by the portrait of their CEO, and you'll notice the tiger security guard, because why not? Meanwhile, the legendary investor Cathie Wood thinks basically the same, that this stuff will be worth a whole lot more in the near future. Now, my second thought is strategy. Virtual real estate, NFTs, and physical real estate have more in common than you might think. Keep that in mind. Obviously, the size of your plot of land impacts the price, but the first key factor to keep in mind is the location of your parcel. In fact, what makes a piece of land hot is how close it is to places that matter. In other words, downtown areas will be more expensive than suburbs, just like in the real world. Do you want to be Snoop Dogg's neighbor in the Sandbox metaverse? Well, how bad do you want to wake up to gin and juice at 2 a.m. because someone paid $450,000 for that honor? Or maybe you want to live next to the new venue created by Warner Media to host concerts for top musicians. There's a fat price for that too. Proximity matters, even if you can fast travel outside of Snoop's house. The second and absolutely essential factor is scarcity. This is rampant in physical real estate. In our real world, there are only so many properties on the beach or downtown. You can't make more beachfront. Unless you're Dubai, you can make more beachfront. Bad example, take Central Paris. It's valuable because it's Central Paris. You can't just magically make it bigger. So the fact that the prime land on our planet is limited is what ultimately makes it a great investment for most people. Now, a legitimate question arises. How does this work with virtual properties? Because one might say that, if the land is virtual, you can just make more of it. It doesn't really even cost anything. So where's the value and scarcity in that? Well, to solve this problem, or to create the problem, however you want to frame it, in metaverses like the Sandbox or Decentraland, the number of properties is intentionally limited, thus providing that scarcity that's needed. So the digital supply is fixed while the demand so far has been growing, and this increases value. Now, of course, unlike our physical planet, the metaverse scarcity is purely artificial. So how does it play out in the future? It's really a matter of how you look at it. Once you purchase your pretty land and you paid top dollar for it in the metaverse, can you monetize it, or does it monetize you? We said that more than any social media or game, the metaverse is a place for business. According to JP Morgan, NFTs currently have a market cap of $41 billion. What's revolutionary in the metaverse and play-to-earn games is you're able to earn money in this digital ecosystem and cash out to the real world. Compare this to traditional video games where you grind for XP to earn money and items, but that value is ultimately restricted within the game itself. So how can you make money with your land? Well, I got some words for you. Rent, advertise, host, and sell. You can actually turn into a landlord and rent out your virtual land. There's already companies that list virtual properties up for monthly rental. You can advertise. Let's say your DigiHouse is in a sweet location with lots of eyeballs. You can actually put up billboards and advertise for interested companies. Then you can host virtual events and charge people for admission. Or you can use your space to showcase your products and sell your NFTs. If you're a brand, the potential for an e-commerce segment is enormous. As we speak, top brands like Gucci are buying virtual land. These are just some examples, and you can really be creative because the chances of monetizing virtual properties are ultimately endless, just like physical properties, actually maybe more so than physical properties. So back to the original question, is it a boom or is it a bubble? The blockchain as well as virtual real estate aren't just a technological shift, but a social shift. And if you think about it, In political philosophy, one of the main reasons why the state exists in the first place is to help safeguard private property. If you're certain as an individual that no one's going to come and steal your property from you, you're more likely to be entrepreneurial and help grow the economy. It's better for everyone. The problem is, even the state isn't perfect, because people aren't perfect. So governments can be overbearing and occasionally corrupt. This breeds the desire for a new system, DeFi. Free from human intervention, a potentially more honest system, if you will. Of course, this is all new and unexplored territory, but the idea is less power to governments. And it seems to be starting to work. Virtual real estate is opening up new business opportunities and jobs. There are mortgage lenders that can help you buy property, and even tax accountants in the metaverse. There are architects that can design your metaverse home according to your vision, and then video game developers who can actually render that building. A lot of this is going to stay because the metaverse is very likely to be a big part of the future. But the issue to consider here is timing. Right now, there's a lot of hype. And according to Metametric Solutions, sales in virtual real estate may boom as high as $1 billion in the coming year. And they might be right, but the point is that this phenomenon is still in early development. We don't have a lot of data to understand how this will play out in the future, not to mention sales of real estate is thousands of times larger, so it's kind of hard to compare the two. All of this makes digital real estate a highly volatile and speculative investment. That isn't to say it's impossible to make money, it's just very volatile and speculative. In terms of scarcity, it's true that the number of plots of land is limited in the metaverse, but the number of metaverses is not. In fact, many of them are waiting to be launched as we speak, and likely many others will be developed soon. This means users might decide to abandon one metaverse and move on to another. This makes it extremely hard to guess which metaverse is the one worth investing in. We can't necessarily say the first will be the biggest. Imagine if you could buy 1 pixel of a traditional video game. When Pong came out, people would have gone crazy buying up those pixels. But technology has advanced and we've upgraded and moved on. That's really the concern of mine, that very few games last the test of time. There's always this new shiny technology that attracts new users. More realistically, we saw something similar during the late 90s, the dot-com bubble. People were investing big money in this new frenzy for internet-based companies. And equity markets absolutely touched the sky in a matter of just a few years. There were tons of new companies, and this was extremely exciting. Then the bubble popped, the market crashed, and most of those dot-com companies went down. But it wasn't all for nothing, because the internet was huge. It became the future, and a few players emerged from that scenario that became absolute giants. Similarly, it's pretty likely that we'll see many of these metaverses today completely disappear. But some new ones will emerge, and there'll be some giants. So right now, we just don't know which metaverse will be the one. Will there be just one massive metaverse? Or will there be many different metaverses for different use cases? One focused on e-commerce, another one more focused on live music, or whatever these niches might pan out to be. We just don't know. There are also several other major question marks. When will the hardware advance enough to create a truly immersive, comfortable experience? Will there be regulatory changes? The metaverse is almost certainly the future of social media and the future of the internet. These new ideas, like virtual real estate, are extremely powerful, and we might see a big transition in just a few years. Meanwhile, it's interesting to jump in, check out the Discord communities of these companies, and monitor how it evolves. There is possibilities to make money here, it's just highly volatile and we can't be certain, but those people digging deep in the communities are going to be the ones who make the massive profit. But what we know for sure is that this is just the beginning, so buckle up.